Welcome to the webinar. We're so glad you're here. I am Nancy Williamson. I am the CPA and founder of the firm, and I'm here with my son, Dylan, who is the CEO. He's our resident real estate tax expert. And he's also, just to kind of give you some context about how we got involved in the auto repair business, he is the proud owner of is it a 2000 or a 1999 F350 1-ton with a 7.3 diesel engine that he's fixing up in his spare time. I say that in quotes because right now it doesn't have a power steering pump, right? So
Or brakes.
or brakes, but it'll get there. It'll get there. Together, we work with shop owners across the country, bringing clarity to their financials and helping you keep more of what you earn. You know, we know most of you didn't get into this business because you love spreadsheets. You're here to build something real, take care of your team, and turn wrenches when you want to. The truth is, though, you're also entrepreneurs, and understanding your numbers is critically important. Without that, you're pretty much flying blind. So today, it's not a long presentation. We're going to break down the 3 key reports that we think everybody should be watching. And we're also going to talk a little bit about, how to hold your bookkeepers accountable and some other Q&A, how to manage cash flow. We'll cover some of those things at a really high level. And of course, Q&A, we might branch into some other things as well. I met recently with one of our most successful shop owners. He meets with me monthly, and we've met for years. I think he started with us in 2020 before the pandemic. He's very into his numbers. He has 3 shops now, and we provide weekly P&Ls for him. So every Tuesday, he's looking at the previous week's P&L and asking questions and managing his business. I don't even know how we got on the subject, but it was super interesting because he said that when he started and for years after he started his shop, he never looked at his P&L. He thought that the P&L was just something his tax preparer needed in April so that they could prepare their, the previous year's tax return. And I was so shocked because he was so into his numbers. He comes to every meeting armed with really good detailed questions. But he said that looking at his financials was the turning point for his career in being a shop owner. He now owns 3 shops, and he's planning on acquiring and opening more. So, I just wanted to share that story to encourage you to take that first step. And after you leave this webinar today, I hope that you will pull your financials and see what you can learn. So let's dive in. So here's what we're going to cover today. We're going to cover, why financial statements matter more than you think. They're not just for taxes. They're day-to-day decisions, helping you make decisions day-to-day in your shop. We're going to walk through the 3 key financial statements, what they are, what they tell you, why they should be reviewed together. We're also going to highlight some of the most common mistakes we see in shops like yours and how they can impact your bottom line. We're going to bring it all home. We'll share a real life example of a shop owner turning things around just by getting clearer on their numbers. And we'll walk you through a quick self-check you can do for your own books, even if you're not a numbers person yet. So our goal today is simple. We hope by the end of this session, you will feel more confident reading your financials and spotting problems early before they become costly errors. So we are Redline Business Advisors. We work with automotive shop owners across the U.S. to help them clean up their books, manage their cash flow using the Profit First system, and build tax strategies that actually save money. We also, of course, prepare tax returns. So that's not mentioned, but that's one of the things we do as well. We're not generalists. We do other industries, but we are very passionate about the auto repair industry, and we do specialize and consider that one of our niches. We understand the real world problems that shop owners face, parts margins being low, flat rate payroll seasonality, all the ups and downs that come with running a shop. So this webinar is part of our commitment to bring you value. We're not here to sell, we're here to educate, because when you understand your numbers, you can take control of your business. What you don't know can hurt you. I think a lot of times what we hear, especially when we are meeting with prospects, is that the shop owners just assume their bookkeepers have everything handled, right? That they're doing the monthly bookkeeping. But the reality is that the bookkeeper doesn't know as much as you do as the shop owner. We see it over and over again. We've got missed deductions, inaccurate reports, and financial blind spots that go unnoticed until sometimes it's too late. When your financials are off, it creates a ripple effect. You might be underpricing your services, overestimating profits, or making investments that you can't really afford. It's like you're just flying blind. You're steering a business without the right instruments, and when the data is bad, your decisions will be too. So let's jump in and talk about the big three statements.
That's my cue, right?
Yes, you're cute.
So the big three statements, the profit and loss, which I think everybody is the most familiar with, your balance sheet and your statement of cash flows. We're going to get into each one, break it down a little bit, what each one is made of and how to read each one of them. So if we can go to the next one. So your profit and loss, your P&L statement, your income statement, it's got quite a few different names. This is, the statement that shows how profitable or not profitable that you are. This is where your revenue is, your cost of goods, your expenses, your payroll, all of that stuff flows through here. I think one of the most important things about the P&L, especially us being an accounting firm and doing a lot of this, is the P&L is largely for you as the shop owner. Like this, we can change account names, we can move things around. We have a set uh template that we like to use, but then we always tweak it. We want to have conversations with the shop owners of what do you want to see here. There's a couple of tax accounts in here that matter to us that have to be broken out. Other than that, it's kind of up to you to what is the most usable things for you. So if you'll go to the next slide, please. We have some examples. All right, so here's a basic breakdown of a client that we created. Right. So you have your income, you have your cost of goods sold. For those of y'all that don't know, cost of goods sold is kind of its own thing that for most shop owners is like the technician's wages, or more importantly and more directly, the parts that you buy for vehicles. That is the cost of a good that's sold. Right. And so this is how you get to your gross profit, your total revenue minus your cost of goods sold, your COGS is your gross profit. This is what it costs you to have the car come in, pay that technician, and get the parts for it, the shop supplies that go into that, the oil, all that good stuff. Car goes out. What's your gross profit on that, right? And then you get into your more general expenses. Nancy, go ahead.
And yeah, and Dylan, I just wanted to, I was researching this earlier. The average gross profit for profitable shops is between 50 and 60%. And so that's something you can really easily monitor to make sure that your profit is staying consistent over months and time. You want your gross profit margin to stay in that range.
And this is, having that range and knowing that that's where your number should be helps you know what you should be pricing things at. Should I be upping my oil changes? Or hey, is my oil change going to be a loss leader, but I need to up prices on swapping out air filters or whatever, right? That gross profit is super important on both identifying how much revenue you should be generating and how much are you paying in parts, how much are you paying in wages, all that good stuff, right? So then everything else, we kind of get down into the expenses. What are you spending on your advertising, your automotive expenses? And this is auto expense, like you have a company truck that gets driven around, your bank fees, your credit card processing fees. That number is always way more massive than everyone thinks it is. Your administrative payroll, all that good stuff, insurance, and then, at the bottom, it spits out your net operating income. You have some other income in there. Generally, this is interest income, or you sold something and got, money for that. And so you have some other income. You generally have some other expenses, some below the line expenses. This is if you have a loan, the interest you're paying on that loan, your credit card interest, stuff like that is generally below the line. A lot of times what we like to do is put the owner's salary below the line because it's so much more controllable by you as the owner. And so we don't really want that to necessarily be a part of the quote unquote operating income for you to be making your business decisions off of, right? And that's how you get your profit at the bottom, which is what goes into the tax return, which is what spits out how much you're going to pay in tax. In short. So this is the P&L. I think you can go to the next one, Jacob, but it does break this down a little bit more. So yeah, this is an example of cost of goods sold, right? So your technician wages, your parts, returns on those parts, shop supplies, you subcontracted something out, you had to pay towing, things that directly go into you doing your job, right? Directly attributable to fixing a vehicle. I paid a tow truck to bring it here. I bought parts for it. I paid a technician, and he used shop supplies while he was working on that vehicle. I think we beat that up pretty good. Next one, right? Payroll. Administrative, technician, you can break this out into your marketing and your advertising. If you're paying people for that, you can get pretty granular, pretty, you can sum it up pretty easily as well. And then, how much are you paying on as a company, the wages, the health insurance, the retirement, breaking all that stuff out, which isn't a small expense if you're paying for people's health expenses and their retirement. And so you definitely want to be able to see that. The next one.
And I'm just going to go back here to say this is just a breakdown. This is a very high level P&L, basically, so we could fit it all on one screen. But we wanted to kind of show you that underneath there's a lot more detail. And as Dylan mentioned earlier, this detail that we're seeing here can be pretty much customized to whatever is helpful for you to run your business.
Absolutely. The balance sheet, definitely the scariest of the statements, and I don't think that's just as a business owner. I know that we've had accountants come into us in the past that are like, I don't like the balance sheet. It's like, well, you got to learn, because it is the cumulative story of your business, right? Of your shop. It is your assets, your liabilities, your equity, everything else rolls into this. Your statement of cash flows is a part of this. Your P&L is a part of the equity section. Everything rolls up into this, right? Your P&L's over a set amount of time. Your balance sheet is a snapshot of the entire life of your business up to the date that you run it. So it's definitely the most ominous, but we're going to break it down and help it make it just a little bit clearer.
So assets is what the shop owns. Liabilities are what the shop owes. That's a really easy way to look at it. And the equity section is what it's worth to the owner.
So your assets, bank accounts, easy one, right? How much cash you got in the bank? Accounts receivable, work that is done, you've sent the invoice for, you're waiting for it to get paid. Okay. Shop equipment, depreciation, assets. Those are all your fixed assets, vehicles you own, equipment you own, machinery, things that generally you paid more than $2,500 for, that is going to be depreciated over the life of that asset. So I mean, this is a really easy, simple snapshot of what your assets look like. I think the biggest thing in here is being able to know what's, when you see the profit of a business or the profit on your P&L, knowing the difference between what's in your bank accounts and what's in accounts receivable is one of the bigger parts of this, right? That you might say, hey, my business is wildly profitable. I've got, $100,000 in profit. Why don't I have any cash? Well, it might all be sitting in accounts receivable and you're waiting to collect all that profit and all that money, right? And so knowing the difference and seeing the difference between those two is very important to how you feel as a business owner. What you're owed and what you have are very different. Liabilities, okay, credit cards, easy ones. Loans, right? You have an idle loan or you're financing a vehicle or equipment or something. This is what the business owes. Where it gets a little bit, more strange is, state comptroller payable, sales tax payable, payroll liabilities. That definitely gets into other territories, which I think which can be a bit of a head scratcher, but know that it's just what the business owes, right? So the easy way to think about your liabilities is your loans, your credit cards, your lines of credit, stuff like that. A big thing to track here is, like that comptroller payable or sales tax. Hey, I owe them $15,000. It is not my $15,000. So subtract that from whatever bank account is in there because you need to pay that. It is not yours, right? That is something that is worth keeping an eye on and not letting those numbers get out of control, right? You know, we all know and have seen it. And I know I've personally done it. I had credit cards that get way too high, and you're like, I don't want to look at that number. You need to be able to track this stuff. Where's my line of credit at? Okay, how much interest am I paying on all this? And then at the bottom, we have our equity section, right? What the business is worth. And the equity is essentially just your assets minus your liabilities. Okay, that's what your equity is. That's you as the owner, what you paid yourself in distribution, what you paid into the business, how much income you've made over the years, how much you took out versus that's funding is the most tax advantageous. The equity is important to make sure it's positive. You don't want negative equity in an S corp. That's something to pay attention to.
Yeah, we lost that. Yeah, you kind of cut out a little bit. Your internet went a little spotty on us. So I think in summary, the equity section, you want it to be positive for sure. That's the first thing your banker is going to look at is if you are asking for a loan, is if your equity section is positive, because that means cumulatively, ever since you've owned the business, you've made money and you've taken less money out of the business than it's made. So it tells a lot to a banker. So they're going to focus a lot on that.
Yeah, absolutely. And that is the basics of the balance sheet. I'm going to hand it over to Nancy to go over the statement of cash flow.
All right, so the statement of cash flows is, I know, something that everybody doesn't look at very frequently, and I'm going to give you a really simple example. The statement of cash flow explains why, when you, in Dylan's example, when you had $100,000 in net profit, why you don't have $100,000 in cash. Okay, that's why you look at the statement of cash flows. And QBO prints it for you automatically if you're a QuickBooks user. You can run it just like you can your balance sheet and your P&L for any kind of time frame that you want to look at it. And it's broke out into 3 different categories. It's broke out into operating activities, which is basically your P&L. So it always starts with your net income, and then it adds and subtracts when you haven't paid all the bills that you owe, or you haven't collected all the money that your customers owe you. So that's basically what the top half, the operating activity, is showing you. The investing activity is if you got a new loan, if you bought new equipment, anything like that, or I guess not a loan. It's if you bought new equipment. That's why that's going to show up in the investing activities. So in this case, you bought a $7,000 piece of equipment, so that decreases cash by $7,000. Now that $7,000 isn't going to show up on your P&L, right? It shows up on your balance sheet. So that's why this is shown here, is that it's not on your P&L, but you did use cash to buy that new equipment. And then the third section is the financing activity. So that's going to show any payments you made on loans or your owner draws. Now, not your owner's salary. Your salary will be on the P&L, but if you take an owner draw, that does not go through the P&L. That goes through the equity section, but it is a use of cash. So in this case, what you would expect to see on the P&L would be $10,000. I made $10,000, but I bought a new piece of equipment for $7,000. So now I only have $3,000 left. And then I made that loan payment and I took an owner draw of $5,000. So I actually used more. I used $2,000 more than I made this month. So you have to look at all pieces to get that understanding of why does my P&L show I have money, but there's no money in the cash in the bank account. And this is a great report to take a look at and analyze.
Common mistakes that we see. This is probably one of the harder earned but can be entertaining categories. We've seen a lot of different things, and that, unfortunately, a lot of it at the end of the day ends up costing money, right? These aren't mistakes because it was a good thing. And so expenses being miscategorized or not reported. That's pretty cut and dry. But what we do see that matters more in this is whether it's tax deductible or not. Right. And we've had kind of one of my favorite stories, I think, is we had a client that was with us that had said, I don't have a tax problem. I'm at a big tax loss. I don't need tax planning. Well, he'd written off a $1.8 million divorce settlement. That's not tax deductible. And when we pulled that off, hey, look at that, you're profitable. You got a problem now. And so it's not necessarily that, oh, I accidentally put my software expense in my sales tax or whatever, right? It's more of, is that tax deductible? Can you write that off? Does that make a difference, right?
And Dylan, mileage and home office deductions are things we see all the time that business owners they just miss it. That's something that the business owner really has to focus on at year end and make sure that it gets booked into the December book so that it's deductible in that year.
Yeah, that's a big one as well. Loans and assets still on your balance sheet that don't belong there, right? This is just kind of about the life of your business. And if you paid a loan off, everything adds together. So if you telling me that you paid a loan off, but the loan's still on the balance sheet, well, where did that money go that you paid to pay the loan off that's still on the balance sheet? It went somewhere, right? And so that's why that reconciliation is so important. Relying on the P&L, ignoring cash flow and liabilities. I think the biggest thing that we see with that is I made $100,000, but you're not taking into account you still owe sales tax. So you take $100,000 out, you pay for family vacations, and then the tax man comes knocking, and you're like, uh-oh. Sales tax is treated like income and spent. That's another one. I mean, we see things categorized in crazy places, and we see disorganization, which makes it where you can't use your P&L, you can't look at it. We could go on to forever on common mistakes that we see, but I think the biggest one, and it's why the slogan of our business is "It starts with the books," is having clean books allows you, and organized books allows you to know what's going on and know where you're at. And maybe that where you're at right now isn't pretty, but it gives you a direction to start working towards and know what to tackle next.
Yeah, yeah. I love this case study. So we had a prospect come to us who hadn't prepared tax returns in 3 years. And it got to the place where he wasn't sleeping at night because he was just convinced that the IRS was going to come and take his house. So he contacted us. We took a quick look at the books, and the books were so far behind that we had to completely start a new QuickBooks file and rebuild his financials from scratch, which is a huge undertaking. I will say that this guy was all in. He was bound and determined to get caught up. He was Johnny on the spot in providing us information and giving us explanations for, loans that he took out and paid off and all the things that we have a hard time getting context to. He was really, really in it to win. And I think we got him caught up in about 3 months. And then we started filing the tax returns. And thankfully, he only had 1 year that was really, really bad that he owed quite a bit of tax on. But we set up a payment plan with the IRS for him, and he's making those monthly payments. And the bottom line is he's sleeping again at night. But the really beautiful part is that in February, he set up a meeting with me to tell me that he was considering selling the shop and that he had an interested buyer. The buyer, he showed the books, the buyer, he showed the buyer the books. They were clean as a whistle. The buyer had no doubt and no issues with due diligence, and they very quickly moved into negotiating a price, and he feels like he's going to be able to ask. He feels confident about asking top dollar and backing it up with real numbers. And I'm hoping to hear from him this week that he has a signed purchase agreement. So he just feels completely different, and taking that first step and getting caught up and getting in control has made a huge difference in his life. So it's really a great success story.
It is, and I think that also, asking for that top dollar, we hear from, brokers and stuff all the time. If the books are clean, it makes everyone thinks there's no skeletons in the
Mhm,
closet or less skeletons in
mhm.
the closet. It immediately raises the entire value of the business because you can see where the business is at, and you're not going, hey, is this real? Is this right? And so we hear from brokers all the time how much more value that drives.
Yes, absolutely. That's a great point. So what do you do after this webinar, right? So I'm hoping that we've motivated you, that you want to start looking at your financials and getting on top of your books and understanding them a little better so that you can run your business and take all those tax deductions that are rightfully owed to you. Let's start with some habits. You really need to be reviewing your financial reports at least every month. Like I said, we have business owners that review them every week, that they sit down on Tuesday. That business owner I was talking to you about, he sits down every Tuesday and pulls the last week's P&L for all of his businesses and looks through them and sees what's going on. Is your bookkeeping current and accurate? It's really easy to tell. Like if you just pull the balance sheet, if you see a bunch of negative numbers where there should be positive, if you don't understand the cash balance, like if you're looking at the bank balances and you compare it to your app on your phone and you're like, these don't even correlate closely. If there's old credit cards on the balance sheet that you paid off 6 months ago, why are they still here? If the credit card balances don't agree with the app on your phone, those all point to bookkeeping issues that need to be resolved. I will say that understanding your gross profit margin is probably the fastest way to profitability, is making sure you're pricing correctly, that you're charging enough for your parts, that you're not buying parts that aren't needed. All those kinds of things. Look at that P&L. Look at your gross profit margin. How confident do you feel that it's accurate? We're talking about the balance sheet again. Is the bank balance is accurate? Is the credit card balance is accurate? Is the loans accurate? Or do you feel like they're close enough? Then we kind of got to talk about cash flow, right? Do you have cash set aside for taxes and payroll? Make sure are you paying your sales tax comfortably every month, or is that a big aha kind of thing? You've got to scramble to find the money to pay your sales tax. And do you have money set aside for emergencies? Would you be ready if someone came knocking on your door and asked to buy your shop? Would you feel comfortable that you could, present your financials in a way that would make that buyer feel confident that he's getting a good deal in a good business? And can you charge top dollar? And are you relying too much on your bookkeeper or your software without verifying? Those are some things to start asking yourself, and getting comfortable with the answers and devising a plan to get things in order if you don't feel confident with these things. So let's talk about some tools that can help you. I've mentioned QuickBooks several times. We are a big fan of QBO. I think for the price, it's incredibly powerful. And I love the fact that we can be a virtual firm and help companies all over the nation because they use QuickBooks and it's online, and I don't have to mess with trying to log into your desktop to see your desktop QuickBooks file.
Or as a
So
business owner, you can log in and look at your stuff
yes,
at home or at the office or on vacation
or on your phone. That's really
or
cool.
on
I
your
can do
phone.
payroll from my phone. So it's super handy, super handy. Great little program. So what point of sale system are you using? We have, owners who use TechMetrics, ShopMonkey, Shopware. We've seen it all.
Mitchell,
Mitchell, but Mitchell is a little bit old school.
it is.
I think the top runners as far as, being web-based and integrate with QuickBooks and give you really fancy reports are ShopMonkey and TechMetrics. So if you
Sure.
don't have a point of sale system that you like, I would start looking at those. Do you have a payroll provider? I can tell you that paying payroll in-house is a recipe for disaster because of the payroll tax liability. That payroll tax liability is back on you as a shop owner. So having a system like, Gusto or ADP that's going to pull that payroll tax the minute you run payroll is critically important. We
And
like
there's
both
nothing
80.
the
Yeah.
IRS takes more serious than payroll.
Yes.
you're worried about an audit, that's one thing. You want to have a revenue agent at your door, stop paying your payroll tax. I give it a week.
Yes. Yes, that's exactly right. Because that's not your money. It's your employee's money that you are trusted with submitting to the IRS. So we like both ADP and Gusto. I will say that Gusto is usually cheaper, but if you have a problem, good luck finding someone to help you. It's very high tech, very low touch, whereas ADP kind of combines the best of both worlds. Their chat feature is incredibly helpful. It's very easy to find somebody to help you if you have a problem. Your banking system. Um, I have to say, big banks, any, Wells Fargo, Bank of America, Chase, the big banks have a bad reputation for not understanding the business owners, their smaller entrepreneurs, but their technology and their ability to integrate with QBO and keep, years and years and years of records is incredibly valuable. So we recommend having both. Run your main operating account and your payroll account through a big bank, but then have your savings and maybe your personal accounts at a smaller bank where you can get those loans and speak with a banker when you need help. So we recommend the both, but best of both worlds. Take advantage of
And
both.
when we say big banks, it doesn't have to be Chase, Wells Fargo, or Bank of America, but big regional ones, nationwide ones, not Midwest Mountain Credit Union
Yeah.
of Ohio, right?
Yeah.
Like that's not that one, okay? But Frost is a great one. They're a huge Texas bank, or there's quite a few of them out there, and it makes your life easier too with all your integration of paying things and hooking up to QuickBooks and all that stuff. It doesn't break all the time where you have to reconnect it and you're missing things. And so it doesn't necessarily have to be the big three, but it definitely needs to be a big regional or national bank at a minimum.
Yeah, I totally good. Totally agree. And then of course your service providers, your CPA, your attorney, and your bookkeeper. I wanted to mention that we put together a monthly bookkeeping oversight checklist, and Gary has that in a PDF. If you would like a copy of that, feel free to reach out to him, and we'll be happy to email it to you. It was too big to include in this presentation, but it's just a checklist of what your bookkeeper should be doing for you every single month. It would be a great way to provide some oversight and get comfortable with your numbers.
So we're sending out a checklist so people can see if they're listening and there are clients, if we're doing our jobs or
Yeah,
not, is what I'm
exactly.
hearing.
I did go through the
Okay,
list and
cool.
say, yes, we do that, we do that, we do
All right,
that. So what are the key takeaways for the last 30 minutes of this presentation? Your numbers tell a story. And you should be familiar with what what that story is. Are you profitable? Are you not profitable? What steps are you taking to make it profitable? They tell a story. Be comfortable with what that story says.
Even if it's a bad story that you don't
Yeah.
like right now, knowing what the true story is helps you put steps in place to make it a good story.
Yes, absolutely. Don't assume your books are right. Verify. Talk to your bookkeeper. Talk to your CPA. It's not hard to look at your balance sheet and get comfortable with your bank account balances, your loans, and your credit card balances, right? And making sure those are correctly stated. The bottom line is clean books equal better decisions and lower taxes. There's just no way around it. That's the benefit of having clean books. And if it feels overwhelming, you're not alone. Ask for help. We're happy to help. Your bookkeeper's happy to help. Your CPA should be happy to help. But it's possible to get this under control and sleep well at night. So, questions and answers after all of this fun information.
Hello again, guys. In case you joined later, I'm Jacob, the operations coordinator. Thank you, Dylan and Nancy, for a great webinar. I'm going to bring Gary on now to handle some questions we received over our emails. And yeah, I'll let him take it away. Gary, your mic is off, by the way.
Thank you. I was trying to be quiet here. All right. It looks like somebody may be writing something, but for right now, I've got some that I got from several emails and I've kind of combined them. One of the first ones that I get, and it goes along with the story that we got that the person was behind for 3 years. The question is, if my books are a mess right now, where do I start?
That's a really good question. And what I would start with is getting your current P&L accurate so that it's reliable. And that's make sure your P&L is accurate today for this month and for next month, and then go backwards and get it straightened out. So it all starts with, are all the banking transactions and credit card transactions for the month of, we're in May, right? Or let's talk about April, okay? Are all of the banking transactions and all the credit card transactions entered for the month of April? Have I made all my loan payments? Have I made my sales tax payment? Are all my payroll taxes up to date, right? Just get comfortable with the here and now before you start getting overwhelmed with what needs to be fixed in the back in the older previous months. Dylan, you have anything to add?
Ask for help. Accounting is
Mhm.
funky. There are rules to it. It's not always as simple as we like to think it is. Ask for help and yeah, just start somewhere. It's an elephant. Gotta take it one bite at a time.
And I have to say, this was not provoked, but one of our clients that is here, Chris, uh, and Krista, they actually have a question, which is a good one that kind of falls right into y'all. It says, how do we know when info is final to pull a P&L? So this really goes to a lot of other ones. It's how often you need to understand if they're working. I've seen several times, so everybody needs to understand, they're usually 2 to 3 months behind. So it's kind of one of those things is, okay, how accurate is the data and where it is? So what are the key things they can look for, Nancy or Dylan, on how to find out when it's good that the P&L is up to date?
Well, if you're one of our clients, the goal is always to have your books finalized by the 15th or the 20th of the month. And then we send a limb video covering, like, on May 15th or 20th, you're going to receive a video covering and reviewing your April books, your P&L, and your balance sheet. So Chris and Krista, if you haven't received that yet, if we're running behind or you're just anxious to get it, just send a quick email and say, hey, when can I pull that information and start looking at April's books? By now, March and prior are done and finalized. So either wait for us to reach out to you or feel free to send a quick email and just ask for a status update.
For everyone else, a big way to tell that's easy, especially if you're in QuickBooks, is go to the bank transaction screen and see if everything's coded. Right? If you've got 2,000, transactions sitting on the Amex card, probably not ready to be pulled yet. That's a really quick, easy way, and that's honestly how I do it. Are these books closed? I'll go to the banking transaction screen. Are there any open transactions? No. All right, then these must be, at least most of the way there. That's a really quick and easy way to know.
Yeah, another question I have here is, I understand that I can be profitable on paper, but still have no cash in the bank. What are the first things I should check if that happens? And just to reiterate another way of saying this, and I've had this happen several times, I'm $1 million shop and I'm living paycheck to paycheck. What is up with that?
So I know I covered the cash flow statement. That is something that can help you with this exact problem. But what I would start with, if you look at the cash flow statement and feel overwhelmed, is look at your owner draws. How much money did you pull out during the month? That does not show up on the P&L. Your payroll does. Any extra money that you withdrew from the company does not. So look at those transactions first, is where I would start. Also, look at your loan payments. Loan payments don't show up on the P&L either. So we break out the interest from the principal. We book the interest expense to the P&L and the principal payment to the balance sheet. But we see lots of bookkeepers that just should put the whole payment against the loan balance. So it'll never show up on your P&L. So if you're paying an idle loan or an equipment loan or any of those, look for those payments and see where and how they're categorized. I also see a lot of slush going through an inventory. If you have inventory on your balance sheet, I think is one of the things that I would recommend that you stop. Just start expensing your purchases. And we can back into a better way of tracking inventory, but inventory can be really slushy and messy and confusing. Just stop booking it to inventory, which is a balance sheet account, and book it straight to cost of goods, part supplies. And then it'll start showing up on your P&L. So there's some big picture ideas.
And accounts receivable is another big one.
Yeah.
Are you collecting the payments you're owed, right? Because we're already, if you hit that invoice is complete, it's marking it as revenue. It's marking it on your P&L that you got it, but you haven't been paid yet. You're waiting to receive those funds. You can run accounts receivable aging report, see how old some of these invoices are. Like go make sure you collect your funds that you're owed.
Yes, that's really important. Good point.
Here's one that I think a lot of people would like to know that we got in. What is a healthy gross profit margin for a general repair shop?
I think it's between 50 and 60%. That's what I always target for when we're reviewing financials. That's kind of the gold standard. So it all depends on what you include in cost of goods as well, right? So that number might be different. Like the way our books, we don't include technician retirement, and we don't include technician health benefits. Those are all below the line. So if you include those things in your cost of goods, it might be lower. The key is to make sure that it's consistent, that it's not 20% one month, 80% the next month, 10% the following month. It should be a consistent number that you can rely on.
Another question here that I would say came from one of our, I didn't write down who it was, but we also, of course, do Profit First. We're Profit First professionals. They wanted to know if they needed special accounting software for Profit First.
Okay, so the short answer is no. Profit First, if you've never heard about it, is a book that was written probably 10 years ago by Mike Michalowicz. Grab the book. It is a great read. If you like audio, it's even better because Mike does the audio himself, and he is one funny guy. So, grab the audio.
Read. I mean, it's not a hard, thick read or anything.
Yes.
And he breaks it down really well.
Yes, and basically what Profit First is for the people who are my age on this webinar, it's your grandmother's envelope system. Basically, you're just putting money aside so that you don't have it available to spend. But instead of envelopes, we use bank accounts. So that's the big picture of it. And I have clients who do it who do their allocations in Excel. They do their allocations on a napkin on the back of an envelope. No, you don't need software, although I heard that Mike just released an app that will help you. So you can check that out. But everybody should be familiar with the book. The book is an easy read. And like I said, if you like audio books, it's very entertaining.
All right. And just to let everybody know, I am considered a Mike Michalowicz stalker because I've read all his books, Fix This Next, Pumpkin Plan, the whole 9 yards. He's great, and he actually takes it with a good heart with it too. So just so you know, it's an awesome system that he has, and he's actually failed. That's where it came from. So anyway, all right. So I've got 2 more questions here if nobody else has got any. One of the ones here that I would say is a great question that they have is, what's the best way to hold my bookkeeper accountable without stepping on their toes?
Step on them. No, just kidding. I mean, I think the easiest way is to educate yourself and be able to read your QuickBooks file or whatever software you have it in and know if it's accurate. It's very easy to say, hey, why does it say I have negative $20,000 in my bank account? I don't think that's very right. I just checked the app, right? Ask questions. Ask your bookkeeper questions. Why does it say this? And if you're not using a bookkeeper, it's even more important to be able to understand everything. If you're using an outsourced accounting firm, same exact thing. Ask questions. They're basically your bookkeeper. in a lot of ways. If you're doing it yourself, you got to educate yourself. But to Nancy's point, it's very easy to know if you're right or not. If your balance sheet, if your bank accounts, your credit cards don't match the app, something's not right.
Yeah, exactly. And I think the most important way to get your bookkeeper in line with you is to meet with them monthly. If you have an in-house bookkeeper or an outsourced bookkeeper, and they're not providing you, here's what we've done, here's how complete everything is, then sit down with them and you can get that checklist from Gary and just in a very non-confrontational way, say, I'm trying to get a handle on my books and I need your help. So I've got this checklist that I pulled and I'm just going to go through it and ask you a few questions. I'm not trying to put you on the spot. I just want to start having an understanding and making sure that my bookkeeping is up to date. So can you show me that my monthly bank accounts are reconciled? Can you show me that sales tax is paid? Can you show me that my payroll taxes are paid? Right? Start asking questions. And they might be very flustered and unsure, and that's okay, right? Maybe you've never done this with them before. So say, I don't want to put you on the spot. When can we meet to review this information? How about 10 days? And in 10 days, they should come back and be able to walk you right through it. And then if you stay consistent and meet with them monthly, it should be very easy for you to get an understanding and be able to sleep at night that you're up to date. If that doesn't happen, then maybe you need a new bookkeeper.
And we got a question here to have, and I understand where this one's coming from. And if I'm not using a bookkeeper, and I'd like to make sure we understand that the owner a lot of times is doing so many hats. So they are the bookkeeper. And for us as a company, we don't spend your money. So we always say you need a bookkeeper, be that the owner or an actual bookkeeper in your company. How does that work? So what are we looking for there as a relationship to a third party bookkeeping company, accounting firm type deal versus what you have in house? I think that's kind of where they're wanting to understand where this question came from. What do you do in those situations?
Gary, I'm sorry. So if you don't have an in-house bookkeeper, right, then I would follow the checklist. I would use the checklist and ask questions, right? Via email, via Loom video, just get yourself comfortable with the numbers.
And again, this is, they were asking if, does this mean my books are iffy since no bookkeeper? And again, I'd like to make sure we understand. So if you have a bookkeeping company, if you will, third party, taking care of your books, the same questions we put in there before still applies in this situation here. Reconciliations, making sure your balances are good, your negatives versus no negatives, stuff of that nature. So that's a key. If you have a bookkeeper in-house, normally what would you say that bookkeeper in-house is taking care of versus the back office information that we take care of or possibly other bookkeeping companies take care of?
I think we're trying to, it's the same across the board, whether you're using a bookkeeping company, whether you have an in-house bookkeeper, whether you're doing it yourself. Use the checklist or educate yourself, ask questions to be able to know if your books are accurate. At the end of the day, what is the most cost-effective way for you to have good books, for you to make good business decisions and be a business owner, right? Maybe that's third party, maybe that's in-house, okay? But the checklist still it's the same checklist no matter what. Books are either factually accurate or they're not. It's a yes or no question at the end of the day.
I think finally that answered for me too. So that's perfect. And we're getting close. We've got about 11 minutes left. I got one question here that I think is very important for everybody to understand. And it is, how do I protect myself from fraud if I'm not the one doing the books?
Oh boy, that's a really, really good question if you have an outsourced bookkeeper. So let's start with the obvious, banking access. when we do bookkeeping and accounting for a shop owner, we do not have the ability to transfer monies or pay bills, right? So we specifically request for banking access that is just guest access. So it lets us see, but we can't make transfers between accounts and we can't pay bills or ACH money out of your account. So that's one easy way to protect yourself, is making sure that you are the only ones who have the ability to do that. Secondly, I think the best defense is a great offense. If you are in your books, if you're meeting with your bookkeeper monthly and asking them all the things on that monthly checklist, they're going to know that you're seeing and you're paying attention to what's going on. We see fraud when what's that old saying, when the but we'll play when the fox away, the hens will play. You know, in other words, if you're not paying attention to your books, then that's the most likely point that you will see fraud occur. So you need to be disciplined about meeting with your bookkeeper monthly, and then review your bank transactions, review your credit card transactions every week. Just sit on your phone while you're drinking coffee and look at those bank transactions. Does everything look reasonable? Is everything in line? Do you see any unknown vendors or unknown transfers that you didn't authorize? And ask questions about that. Again, if they know you're looking at it and you're paying attention, they're much less likely to do any fraudulent activity against you. I will say, I've got a quick story, and I know we're running out of time, but I've got a quick story. I had a client that I did bookkeeping for a number of years. And they got bought by another larger client, customer. One of their customers bought them out. And when they got bought out, let me retract just a little bit. I hired their bookkeeper. They wanted to have an in-house bookkeeper. So I said, fine, I helped them evaluate the candidates, and we hired a bookkeeper. And I worked with that bookkeeper for 2 years before they got bought. And she went to the new company. Fast forward a couple years later, I ran into these guys at a Christmas party, and we were visiting about all of that had transpired since they got bought. They were a multi-million-dollar business by that time, and the bookkeeper had stolen $550,000 from the new company. And one of the partners told me that it started the minute I was no longer involved. The minute that they got bought and they got a new outsourced accounting team that wasn't paying any attention to what she was doing is when the fraud happened. So that has always stuck in my head, that really the best defense is a good offense. Pay attention, ask questions, let them know that you're in your books and you're paying attention and you're looking at your banking transactions.
And it's not as daunting as you might think. It is all math, right? It all adds up. That's why we always make jokes about accountants with their 10 key and being, nerdy in math, but it all adds together. If something is, just like I said earlier, hey, I paid off that $100,000 loan 2 years ago. Why isn't shows paid off? Well, where did that $100,000 go? It's somewhere in your books. We need to go find it, but it's not like it just disappears. So it's all math. It all adds together at the end of the day. And so if you are looking at it, and you know what to look for, if the bank account is $100, there should be $100 in revenue, right? Like, it should add up. And it's more complex than that, obviously. But if you have your eye on it, you start to know, what you're spending generally.
Mm-hmm. Exactly. All right, I think that's it. Gary, anything last minute?
Yes, just so you know, I wanted to make sure there's info at redlineba.com. There's also Gary at info@redlineba.com. We normally charge for our evaluation of your books and compare them to your tax returns. That's usually $750. But if you mention this webinar, we will do away with the cost, and we would be more than glad to help you. There's no dedication that has to be done, and you have to become a client. We're more than willing to give you the information. And if you decide to go with us, great. And if you don't, that's fine. You still have great information to go back to your CPA, bookkeeper, whatever you want to do, or go with someone else. There's an abundance out there. We're fit for some, not for everyone. And I just want everybody to know we're here to actually help, and we want you to be successful. So that's what we offer if you want to take us up on it.
So thank you, everybody, for attending. We are going to do future webinars. Please help us spread the word. We would love to have more attendees and more people interested, because I think it's a super important topic. And so thank you very much for your attendance and your attention, and give us some feedback on how we did.